Yo, hello. Alright, I'm pissed off. I did this once and it crashed. So I'm gonna be quick. I'm gonna go over today's market. I didn't trade today because I have a rule that I don't trade Mondays because there's no news. Although today did have news, it was not like a normal scheduled news. So yeah, I still didn't trade. But anyways, a lot of people complained about today's market getting stopped out and stuff, so particularly these equal lows, which I'll explain. So let's do our bias for today. Open, low, high close, and open, high, low close. According to yesterday, if you know what open, low, high close, and open, high, low close is, if you don't know what this is, you should search it up. It's the best way to determine bias. Anyways, according to that, from yesterday's daily candle, today we are bullish, which means today we are seeking a open, low, high, close candle or market. Since we're bullish, we want our day to end or close higher, right? So in order for us to close higher, we have to open lower. Open means true day open. In terms of time, it is 12 p.m. New York time, and that's why we want to see a open market go lower and then close higher when market closes. So throughout New York and lunch PM session, that's when we want to see a bullish trend. But before that, we want to see a bearish trend, which is exactly what we saw. That being said, during this time, I gave a call out to some friends. Didn't end up playing out, but this is our peak of the market right before this dump. So this is the AMD. You mark the standard deviation out. -1 did not get respected. You want usually for -1, most ideally, I'm speaking in a like fantasy environment where everything is sunshine and rainbows, everything works out to like the best that they could. So -1, you want to see accumulation and then a retracement back to OTE of this current range. We didn't see. -1.5 is the backup plan B for that, and we did see a rejection and we did see accumulation. Ideally, we would have wanted to see a retracement back into the current OTE range, which would be here, and this fair value gap OTE 0.62 to 0.7 at this area, and true day open aligned really well along with a 1 hour CISD right here, right at open. So I gave alerts. I gave an alert for shorts around here at the true day open, but this never ended up getting tapped into. I called that out around this area in the market. So that was after I saw a respect of the -1.5 and also the confirmation. It rejected off of this rejection block really well. So it was pretty high probability to go back up here and then like to see something like this basically. Like that. And then to seek lower for like Asia, London, and then uptrend for New York. But that didn't end up happening, we just dumped. So that being said, this is still respected, the standard deviation, because -1.5 did give the accumulation that we wanted to seek, meaning this standard deviation is still valid. And if we look at the max expansion, -4, what the fuck? What do we see here? Look here, max expansion gets tapped in New York. So scaling down, this was right at market open, right before market open. So right here we tapped into it. Anyways, let's go through this market chronologically in terms of time. I'm gonna make references to the class I made teaching standard deviation and how I trade it. So if you didn't watch that, you'll be a little bit confused because I'm going to be using references and terms that are from there. But how do you use standard deviation? Standard deviation is a measurement tool that you apply on a manipulation leg to measure out the distribution and how it'll play out. And what is manipulation? Manipulation is a leg that taps into a higher time frame point of interest or liquidity. And a higher time frame -4 is a point of interest. So on the 1 minute, this would be our leg. This leg that tapped into the -4. -1, this is more volatile because it's like New York Open. So you're not going to see as perfect reactions, but if we look at this wick right here, -1, yes, it did react, and it probably accumulated on the seconds chart, but on the 1 minute. Then -1.5, you see here we did retrace, a small little accumulation. Then remember, standard deviation is a range, not a exact level. So we did want to see a retracement on the -2 to -2.5 range as well, and that's exactly what we got. So then we were seeking a retracement back down to this whole OTE level, so around here, or any aligning PD arrays within this area. But the one rule is that we do not break this low. And we did not. Look at that. We didn't break it. So it's still valid, right? And even stronger, this point is for the people complaining about like making equal lows and blah blah blah, and like that's bullshit, because they were probably like waiting for like a liquidity sweep or whatever to trade. But this was the SMT with ES right here. So if you take that into account and then you look at NQ, factoring in this current standard deviation and the fact that it's retracing, not a reversal, a retracement. Where the fuck? Oh, well, yeah. Factoring in the fact that it's a retracement, and we made SMT with ES, and ES showed bullish order flow. This was very bullish, and now we apply another strategy. Well, I apply. I don't know if you guys have ever heard of it, but it's the 10 a.m. key open. And 10 a.m. key open is not just some made-up ICT bullshit. 10 a.m. in terms of time, in New York time, is when the options contracts in the options market, they roll over and they refresh. So there is a real statistical and mechanical effect in the market for this confluence and this strategy. So to sum it up in a nutshell, 10 a.m. key open is basically just using market when 10 a.m. opens, right, on the charts. And what this basically, or fundamentally, how the strategy works is that once 10 a.m. opens, it will manipulate into the opposite direction that the market is actually seeking to go to. And then it'll have a retrace back into, or it'll close above that manipulation, so go back in the opposite direction, and then have a retrace back into 10 a.m. the key open, and then it'll completely reverse the direction that market has been trending in since market open. So since market open, or all of this stuff was bearish, right? We have all of this bearish stuff. So let's add up our confluences one by one. So for one, higher time frame, we tapped max expansion, right? So we wouldn't want to see lower than this box right here. This is a max expansion from our overnight session. And let's remember, today we want to see a open lower and a close higher. So given the fact that it's New York right now, and today statistically should close higher, meaning higher than the true-day open, which is all the way up here, considering the market's down here, it wouldn't make sense for market to keep going lower. So a bullish bias is really, really, like, it would make sense to have a bullish bias. So for one, we have bullish bias. Two, this OTE, this standard deviation that is getting respected because market is accumulating, and then what's it called, retracing back exactly where we want it to. So standard deviation, and this is basically, you want to see a retracement back down to the original, your anchoring legs OTE, so around here, this area. And the one rule is that the original legs, very low or very high depending on what direction you anchor it, but in this case the low, the low of the leg does not get taken out, which it doesn't right here. Right? It's small, but it didn't right there. So that's for one, bias. For two, this standard deviation is getting respected, so we can count on the rest of the rules and stuff for this standard deviation to apply, to continue applying to the market, because its current stuff is getting respected already. So we can expect for these lows to be protected and not get taken out, and for this to be a this downward move to be a retracement to go higher. And 3 or 4, SMT with ES, that's another bullish bias right here. Number 5, 10 a.m. key open. What did I say? 10 a.m. you open, you want to see a manipulation down or in the opposite direction, and then a close back above, and then a retrace into the 10 a.m. key open, and then it'll pump or dump. It'll just Drake candle back into the opposing direction that the market has been going in. Market has been bearish. Bias is bullish. So with this tap, this aggressive blue candle, this tap and wick into 10 a.m. key open right here, after we manipulated right after open, close back above, and now we want to seek a tap back into 10 a.m. and also aligns with this 10 a.m. candle created this CISD, so it's perfect. This is like literally A plus longs right here. Although stop is a bit big, you can do smaller stops or whatever. I just stick to the rules and do 10 a.m. strategy with stops at the very bottom of the current whatever range has been made. So yeah, this was great longs. And then this was another leg, right? So we mark this standard deviation. You can either target -1, which will result in a retracement. If you don't want to risk that much, then you can just target -1. If you want to be ballsy, target -1.5. You'll psychologically go through all of this and then this dump back down. But if you stick to your strategy and cut off emotions, you'll know that it's just a retracement. And then once you see this dump, you wouldn't be like panicking and shit. You'd know that it'll continue higher. You can target -2, target everything. But remember our bias. We're bullish and we want a close above for the rest of the day. And that means above true day open. And guess what? True day open aligns with our current standard deviation max expansion. Perfect target. Or perfect shorts. Again, target this, target that. Boom. 220 points. Straight rally, straight up. No real retracements. Great market. Perfect. Or short this. Max expansion. And also true day open. 10, 15 point stop loss, whatever you want. This played out 96 points, more than you can ask for. Target the lows, whatever you want, bro. Dude, that's great for a Monday. More. Let's see. Going on the higher time frame. This original standard deviation, we haven't completed it yet. To complete it, we have to go to max expansion. Currently, we have respected -2, right? To a dump back into original manipulation legs OTE. So somewhere here. And we didn't break the lows, right? Lows were never taken. And then we retraced back up. So now we want to seek -4. Because if you remember the rules that I taught for standard deviation, the full reversal zones are either -2, this range right here, or this range, -4.5 to -4. If -2 is not the full reversal zone, then it'll be a retracement zone. And if this is the retracement zone, then that solidifies that -4, this will be the max expansion. This is going to be the draw for the day. And since we saw that at this point in time, or like around here in the market, this wasn't the full rejection zone, and it was just a retracement, and I retraced really, really nicely, I might add, we will seek -4. So given that to be our new bias and target, we can remember, ever since here, we are still bullish on the day, and we want to see it close above true day open. So we're just biased, bullish, we're just pumping the whole day. That being said, you can literally find any long continuation, this one being A plus again. Breaker block, we have a order block which ran through, and now this previous resistance is now support. We see this 5-minute candle get tapped into it, form a wick, although the candle is still bearish. In order for a wick to be considered a rejection block, this candle, the wick that taps into it, that candle either needs to close in the opposite direction. So this candle either needed to close bullish, or the next candle has to close bullish, and the next candle closed bullish. So this is now a rejection block. And now scaling down to a lower time frame, we mark this wick out as a rejection block now, because this previous, the candles after that closed bullish, making this a valid rejection block. So what I do, people usually mark the CE of this and trade the CE of rejection blocks, which have really, really good RRs. But something I've noticed is that they get left out a lot, meaning they get edged. So this is something I found out. I don't think anyone else does this, but this is the quadrants of a PD array, which means you mark the quadrants of it. And I usually enter on the first quadrant, which is the 0.75. So the first quadrant of the PD array. And this usually gets tapped in a lot more often. So this is another A plus entry, 3-point stop loss. Like, even if you're like, dude, this is literally no risk. This is the stuff that I do. Like, these are the trades that I take. You can take 20 of these and still be good if you lost every single one of them, which is not possible unless you're taking like shit ass levels. So this is kind of how I trade. I see a lot of these high probability, low risk levels, and you just take them. Who cares if you lose? Look at the risk. You have a 3-point stop loss, bro. And the upsides are huge. So this would have been an A plus trade, and this leg, another standard deviation. You can use this to target, but remember, we have our -4 that we still want to seek for the rest of the day. And guess what? We perfectly took out -4 just like an hour ago. So this is another great ass trade. Let's say you're late to that trade, but you still need to factor in everything that happened here. Let's say you just weren't on the charts, but you see this and you realize what is happening. So market is still continuing bullish even after we passed true day open, and our draw for the market is true day open. So we have all of this area to still long if you can find an entry. 130 points. Here's another late entry. We have this whole leg up, right? You mark the OTE, you find a PD array that aligns with it. Bro, like, do I have to explain? Fair value gap, most simple thing. OTE around 0.62 and 0.79. This area right here perfectly aligns. Although this one isn't as precise, just market order. Even after this candle right here, you see that it closed above and rejected really heavily off of this and closed bullish. You can enter on this. This is like so beautiful. And then if like, just look at market structure. Nothing is showing downward like bias. Everything is bullish. And going on the 15-minute as well, this formed a order block. And right where all our point of interest were, the OTE and then also the fair value gap, blah, blah, it's right on this order block. It would only make sense for us to tap into this and continue higher. So I don't know what else to say, bro. This is perfect. And just targets the -4. Boom. And this stop is really conservative as well. You just put the stops at the low right here. Your stop, theoretically, my stop would have been like a lot smaller, like 10 points or whatever, just to watch the market, watch how it reacts. So this is great. Another thing that I should have added, other than this rejection block right here for this long, why did I delete it? Long at the quadrant, stop at the low, 3-point stop. Other than the fact, so the confluences other than just the rejection block, this is a leg, right? And what do you want to see in a leg? You want to see a retracement back down into the OTE of the manipulation leg, either before or after tapping -1. In this case, it was before -1. Or yeah, before all this -1, -1.5, -2 got tapped into. This is still valid. And this area aligns perfectly with 0.79. More premium, you could put 0.88. But this is only for if it aligns with another PD array, which in this case it does. This would align perfectly with like around our area of this rejection block's quadrants. So you would add this, and this is literally, I think, a tick entry. This is perfect. But I usually don't have that. I only manually put it on when I see like a trade like this and I see PD array a little bit lower than the 0.79, and then I'll add this to see if it aligns well with the PD array. And if it does, boom, A+ trade. So like, yeah, man. And then what do we do at max expansion? We cap out on volume. And what does that mean if we were on a bull run? If we're on a bull run and we cap out, that means we head lower. Dude, today is like fucking beautiful, bro. I don't know. But this is longer than I expected or wanted to make it. But yeah, hopefully someone learned something from this, or like all of these biases and stuff. Hopefully you can add it to your strategy, implement it, try it for yourself. Hopefully you make fucking bands with it. And if you do, and if you get rich, I'm taking 50% of everything you make. Thank you. Contact me on whatever. I will be expecting my commission. Thank you.